Hi, thanks for joining us. I'm Prosper Melomey, and I'm a director at Bridgewater Advisors Limited, a leading investment banking firm in Ghana. And I have with me here Mathias, Tummey, who is a research analyst. And today we are going to go into the happenings around us in this World Economic Outlook and seeing and going into the details of the developments in emerging markets from what is happening in advanced economies and other areas in the world. We intend to answer certain key questions such as if we are going to see recoveries anytime soon, and if we should expect any recession in the short to medium term. And also, particularly when it comes to Africa, what are the prospects? What is it for Africa in all of what we are going through currently on the global front? So I'm just going to go right in. Mathias, welcome.
Thank you very much for this opportunity.
So we are going to look at the global economy, and Mathias is just going to take us through the history of developments up to the point we are currently. So Mathias.
Yes, so we look at the world from 2018, 2019, which we classify as the pre-COVID times. Major economies were experiencing some form of growth, and the view was much more promising. So then in the COVID-19 pandemic now comes to short circuit most growth in most parts of the world.
That's 2020.
Yes. And that affected a lot of production and affected household incomes. It's caused inflation because the production wasn't really at its best. That created a lot of problems for most economies. Debts in most countries increased. And we're looking at the support of medical advancement to intervene, and by 2021 we were coming to a point of seeing some improvement in the dealing with the pandemic. So the expectation was that most economies were looking at recovering from the pandemic shocks, and then suddenly we see the February Russia-Ukraine war, and that also added to the post-pandemic issues. So we are in a situation where we're trying to recover from COVID-19 issues, and then we have the Russia-Ukraine war coming in to hit most of the economies in the world.
Right. So that is the timeline of affairs globally. Indeed, the Russia-Ukraine situation was unexpected, and so the key drivers of the global economic environment is basically the COVID-19 situation, which we are all aware of, happenings in Ukraine, and these two major activities have impacted the globe from a pricing standpoint. So we are having inflation being the major economic conversation currently, both advanced economies and developing economies. So we'll just go into how the world is looking now. Our reports and our analysis is pretty much based on findings and analysis by IMF. And so IMF comes out with issues on World Economic Outlook. And in its current outlook that was published in April, we went through that to be able to establish what we have before you. And so you have last year, actual growth was 6.1.
Yeah.
And based on the major developments that we just discussed, COVID-19 and the Ukraine situation, have led to a downward projection, 40% downward from last year, which is 3.6%. And this is expected to stay relatively the same going into next year, and then decline slightly to 3.4 in 2024. So this is what we are looking at on the global level. The major issue, as I mentioned earlier, is inflation and how this is hitting a number of other areas. You know, the core issue with inflation is to do with energy and the agri sector. We have food inflation being the major issue we are facing globally. And of course, when we have essentials such as energy and food spiking in prices, this tends to have a ripple effect on other areas of the economy. Mathias, you could add to this as well.
Yes, and so leading after this spike in inflations are certain aggressive decisions by most central banks to tighten monetary policies. And this is really going to affect the access to credit in most parts of the world. And so we are looking at a situation where now we need to tackle inflation as much as we are trying to recover from the post-COVID situation. And then now Russia-Ukraine situation is adding up. Now we have to find a way to deal with people being in the state where their demand is affected. They can't really make purchases, refugee situations in parts of Europe. And how do we deal with our debt situation in most of the parts of the world? Because the COVID had really affected the fiscal space in most countries.
Yes, so critical to this is, countries having to make a decision with tackling inflation, safeguarding the recoveries that have been made by on COVID-19, let me say. So what happened is a number of economies put in place measures to curtail the drawbacks from the COVID situation. And all of a sudden we are faced with another situation. And so, a lot of governments are faced with the decision of whether to focus on dealing with the recoveries from COVID, pushing those advancements, or turning their attention to what is happening in markets with inflation as a result of tensions in Eastern Europe. So this is the situation currently globally, and we're going to look at it from an actual perspective. So yes, there's a lot of tension, there's a downward trend. However, we are still experiencing growth. In absolute numbers, last year, the world was at 96.3 trillion in global GDP. This is expected to grow to 110.8 trillion by 2023. So there's still a positive to all of this as well. It's not just a downward trend. But we also need to bear in mind what makes up these values. So when we look at it critically, we have advanced economies making about 41% of the global GDP, and you'd have what we call emerging markets and developing economies coming in with about 31%. So the two major blocks constituting about 70% of global GDP is emerging markets and advanced economies. The interesting thing here is the trend when it comes to growth in advanced economies is going downward. It's a downward slope, and for emerging markets it's an upward slope. And this really poses a lot of concerns, particularly given that advanced economies drive the global economy. If there's a downward slope and it gets to the position or the situation of a recession, it stands a chance of creating what we call contagion. In this situation, disturbance in one market can move on to another market, and then it eventually becomes a general situation. So if advanced economies get into this situation of recession, the risk case is going to affect emerging markets and then put the whole globe in this situation of recession. And that is what we are really looking at and monitoring activities in advanced markets and hoping that policymakers are able to put in structures to reverse the downward trend. That's really what it is currently. And so if we look at the major blocks, to go a bit into what is happening to understand how each sector is performing, As I said earlier, you can see in the first chart to your top left is advanced economies.
Yes.
We are expecting a downward slope. Yes, downward slope. So last year was 5.2, indicative of progress made on COVID-19. And then the Russia situation, causing a big problem. You can see from this year heading all the way to 2024, there are significant drops. If we look at the chart on the European Union, you could see clearly the massive decline in growth. From last year's 5.4 and going all the way to 2.1 by 2024. That's a big problem. Yes. So regarding Asia as well, Middle East Asia, there's a decline, but the rate of growth isn't that low, mainly because of some oil production, and we know there have been some gains on oil prices. The energy space has had a lot of inflation, and that seemed to be helping some countries within that economic bloc.
The oil exporters.
Yes, the oil exporters are making gains because of prices. And so when we look at the emerging and developing economies chart, the interesting thing here is, as much as there's a sharp drop from last year to this year, you can see the upward trend. I mean, there are a number of reasons for this. Mathias, we know inflation is a major issue. It's hitting emerging economies as well. But for example, we have China's situation. China had to do a lot of lockdowns in order to curtail COVID-19. But at the same time, that had a lot of issues as far as productivity is concerned when it comes to emerging markets. So with China easing down lockdowns, definitely there are growth expectations within the region. Mathias, you could add a bit more to what I've said.
And just like you said, if you look at the chart, almost all the different blocks, 2021 was looking very promising. Then the sudden drops that come in, and most part of the emerging and developed economies are looking at certain key exporters. Most key exporters, those who export oil and then gold, cocoa, really are expecting that as prices seem to go up, they're going to make gains from those exports. So those are the possible reasons for such growth expected in some of the developing and emerging economies. Europe is not looking so
interesting at the moment,
because the European Union is depending so much on the inputs from Russia and for their manufacturing, especially their car industry. So the fall in those special inputs is really going to affect them, and then definitely energy. Looking forward, it looks like certain decisions have to be taken to change their dependence on Russia so that they can be able to turn the tables around. UK is experiencing very high inflation, that's high for even like 40 years now. So advanced economies and the European Union are really seeing a big hit by this situation, and then you're expecting that refugee situations is going to increase. People are migrating more to these parts, and so pressures on social, amenities. Yes, but some say that there can be an increase in labor supply, but as to how well it will add to productivity is yet not determined.
The refugee situation is really a major influencer of the situation in Eastern Europe, particularly because a lot of governments within that area, talking about Poland, for example, will have to begin to make fiscal space. There were no rooms in budgets for those refugees. So this is something that is new, and governments will have to make provisions to cater for them. So yes, this is causing a lot of difficulties within the region, And the interesting thing is trading partners, a lot of trading, in terms of Russia, for example, we need to think about the sanctions.
Yes.
The sanctions on Russia has a dual implication. As much as these sanctions are supposed to prevent Russia from making advances in Ukraine, they do have a counter effect. So these effects are limiting Russia's trading abilities, would also influence or impact its trading partners.
Yes.
And this is a major issue. So we already know Europe relies on Russia for major energy needs.
Yes.
There are also metals and other resources that come out of Russia.
Yeah.
So this is causing a lot of challenges and even hitting Africa at large when it comes to some of these trading relationships.
Yeah.
Obviously, the European bloc has some financial linkages that go through the Eurozone and also Russia as well.
Yeah.
This is also coming under a lot of pressure.
Yeah.
And so the whole situation with Russia more or less has revealed the extent to which the the Eurozone or the European Union is really much dependent on trading relationships with Russia.
Yeah.
I believe Russia is aware of the extent to which these relationships can impact the global economy.
Yeah.
And that is why they don't seem to be deterred by any of the sanctions. So that's a major issue that is developing currently. But then we need to also look at Sub-Saharan Africa.
Yes.
Which is covered in the emerging and developing economies.
Yes.
And so the question is, what is the situation currently amidst all of these happenings?
Yeah.
What is the current situation in Sub-Saharan Africa? From the IMF projections, we expect growth within the region. Although there will be a slight decline from last year, we expect some rise from 3.8 this year to 4.2. Yes, 4.2 by 2024. We are looking at an average of 4% growth for Sub-Saharan Africa. And the reason for the downward trend from last year basically is supply shocks, which is as a result of the commodity markets and trading relationships with Europe. This seems to be one of the major issues that is having impact on other areas. Matthias, I'll let you come in here and also share some of the issues that are affecting Sub-Saharan Africa.
The supply shocks are very great because Africa is a net importer. Most of its goods coming from Europe and outside. So the decline in supply of some of these commodities is really affecting Africa. That's why we see the immediate decline. This supply shock is leading to inflation in most parts of Sub-Saharan Africa. So that is threatening the growth because it's taking most of the economy by surprise.
Yes.
I remember the governor of Bank of Ghana said they were taken by surprise by the high inflation because most of the inflation are coming in from outside than what they expected. But we are looking at the increase in oil prices bringing some form of gains to the region, especially oil exporters like Nigeria, expecting that, and other exports from this region really. Whilst prices go up, we're expecting that it will bring a form of growth to the region.
Yes, I mean that's definitely a gainer for Africa for oil exporting economies. But with regards to food inflation, that is a major issue.
Yes.
This is a unique situation. There are certain trading relationships that exist between Africa and Europe, particularly when it comes to, for example, wheat. 40% of wheat consumed in Africa comes from Europe.
Yes.
And so that is a major thing with the food market. Food inflation is currently on the rise. And let's not also forget that one of the major trading partners of Africa is China.
Yeah.
You know, and we are aware of the lockdowns and its implications on China and Chinese production.
Yeah.
That has also had some impact on what is happening in Africa, and so generally that we are experiencing shortage of certain products.
Yeah.
Steep prices as a result of supply shocks.
Yeah.
And this is impacting Africa. But the counter effect of this is we are seeing economies that are oil exporting, making gains because of rising oil prices. We are also seeing new lines of production when it comes to filling in the supply gaps coming up in sub-Saharan Africa. And this seems to be giving the continent some level of gains. So I would summarize Sub-Saharan Africa, you know, so we are expecting an average of 4% growth between this year to 2024. Aside of this, we're also looking at inflation being pegged at 12.2%. And this is mainly as a result of high global food prices. We are also expecting further supply disruptions. You know, it depends on how the Russia-Ukraine situation goes. And that is very key in determining this. We also know that in a situation where we have basic necessities, essentials, going through hyperinflation, the issue is there's usually tension amongst the populace. So you'd expect social and political unrest. Therefore, there are certain areas on the continent that are prone to instabilities at the moment. In recent times, there have been a lot of political tension in West Africa. And so this is something that policymakers and governments need to watch out for within that region. And you know, if some of these issues are not curtailed, then it could easily become a social issue. That would have a lot of implications. And you know, anytime we get into social issues that create political tension, this also seems to affect investments. So you have investors that intend coming into that region begin to hold back. And when that happens, then we also know that it has a major impact on other economic activities. So this is a major issue. The good thing to look at is the gains that oil brings to economies that export oil. So this is basically the situation and the outlook for Sub-Saharan Africa. Matthias, do you have any to add to this?
I think that the emphasis on the fact that if these supply disruptions are not curtailed, we will see that some form of social unrest is important for policymakers and the region as a whole. So I think that if the right decisions are taken, we can see a good picture.
Right. So we are going to look at Ghana and see how Ghana falls into this bracket. We are looking at Ghana in the context of West Africa. West Africa is pretty much not really changing a lot of direction as far as the projections are concerned. Last year, West Africa was at 4.5. This year, interestingly, growth is expected in this region. And then we are also looking at an upward going into 2024, up to 5.6. And you juxtapose this with Ghana, you can see that similar trend. So when it comes to Ghana, for example, there have been gains made on COVID-19. We've seen the government, the president for this matter, come out to ease restrictions. And this has caused a lot of impact on economic activity. You know, so this is one of the reasons why Ghana is moving in an upward direction. So these recoveries are positive. However, the wider shocks in the global environment is having an impact on the economy, particularly from the inflation standpoint. But in general, Ghana is making gains. I would attribute this to the easing of restrictions by the government.
Yes.
This is a major driving force for Ghana, and this will go a long way to impact or to influence the narration going forward and what is actually happening on the ground, provided we can handle the inflation situation.
Yes,
yes, Ghana is currently going through that high inflation situation, particularly within the energy and food space.
Yes.
So if that can be handled very well, then I foresee Ghana going a very good direction when it comes to our economic prospects. So Mathias, you could add to this.
Truly, if we are able to handle, because we've seen inflation moving from as 90.5% to 23.6%, largely exactly due to what we call imported inflation, because it's from external sources. So if we are able to deal with this inflation situation, we will be able to now see a good environment for growth. The Institute of Economic Affairs is projecting that the government should also increase the monetary policy to about 19%, because currently it's at 17%.
Yeah.
So that, in the long run, we are seeing that with that they can curtail the inflation and able to solve the issue at hand. So in the general, in as much as we are seeing some form of growth, the inflation from our side is affecting us. I've missed trying to solve our debt issues in this region, because COVID-19 increased our debt situation.
Yeah, and yes, that's true. So that's true. But the other thing we need to mention when it comes to policy rates going up is the reduction to access to credit. With the intention to slow down inflation by increasing policy rates, there's a direct impact on access to credit, particularly to the private sector. So when it comes to the private sector in Ghana, in particular in other areas where they are tightening monetary policies, the private sector would have to expect that interest rates from commercial lenders is going to go up.
Yes.
And when that happens, obviously it wouldn't be the best situation for businesses, and for those who borrow would have to expect higher costs and thinning of margins when it comes to doing business. So this generally the situation in West Africa and Ghana. We are going to go on to look at what the outlook is like when it comes to different sectors, major sectors within Ghana and Sub-Saharan Africa. So we start off with the extractives. Africa is major on extractives. Gold, oil and gas, bauxite, etc. Cocoa, yeah. So that's a great sector actually. So when it comes to the core extractives, Ghana, for example, is heavy on gold. And gold prices have had a downward trend. So as much as we spoke about oil earlier, how certain countries will make gains on oil, gold is expected to. Currently, we are experiencing a downward trend. This means a lot of governments that rely on some of these commodities experiencing downward trends would have to revise budgets. That's one of the major issues. The other part is what we've said. The oil and gas experiencing sharp rises creates a room for massive gains. So that is what is expected on the extractive. For private sector entities operating within the extractive sectors, experiencing downward trends would also have to readjust to their operating mechanisms. Mining companies who are not making as much gains on their mining products would have to look at rationalizing capital. That's one of the core things for the sector. Then we look at manufacturing. Matthias, you can take us through manufacturing.
For the manufacturing, we are going to see that the situation creates high cost of inputs and operations. Manufacturing sector is going to really have to now buy their inputs at a higher cost, and operating their business is going to be it's going to increase. This has effects on their margins. From what would have been the case.
Yeah.
And so they would have to take very good pricing policies to see how best they can transfer some of these high costs in terms of prices. Because once prices are increasing, they would have to know whether they can
whether to absorb it,
yes,
or transfer it, to the final customer. So this is it with the manufacturing space.
Yeah.
The question is, there has to what's going to be the approach to pricing?
Yes.
Is there going to be just a simple transfer of inflation, or would companies be forced to do a re-evaluation of their pricing policies to see what to contain, what to transfer to their customers? This is really the core when it comes to the manufacturing space.
And that's where the elasticity of some of these commodities come in.
Yeah.
The responses by the consumers.
Yes, definitely. Yes. Definitely. And now the capital markets. So the capital markets, the core things here to look at is volatility. Yes. Uncertainty hitting most of the markets.
Yeah.
Definitely creating volatility for the space. We have the Eurobond market, which is one of the main points of capital for most African governments, suffering from lack of investor interest.
Yes.
Because of this same uncertainty. Yeah. And also the risk of contagion from advanced economies. As I mentioned earlier, the downward trend in advanced economies is most likely to spark slides or downward slides on the advanced market, capital markets. When that happens, definitely there's this risk of contagion. This same situation could hit African markets as well. Yeah. So this is also an area of concern which has to be looked at going forward. Yeah. And then the consumer markets. Yes. This is an important area. This is where
large number of people are affected.
Yes. This is where we have a lot of the populace, the larger population, having direct interaction with the economic situation. Yeah. And what is happening is the inflation situation hitting food, and this is a major issue. So going forward, the expectation should be variations in consumer behavior, where consumers are going to be switching and substituting products in order to cut down on cost. And when this happens, there will be some losers and winners. Okay, and what will be good for Africa at large is if there can be efforts to begin to create solutions to areas where there are gaps on our markets, because consumers will be looking to switch. So for example, if we have a product that is imported but is hit by high inflation, and therefore consumers are ready now to look at alternatives, then this creates a perfect scenario for local producers to fill in the slot. So this is what to expect. Businesses operating in the consumer markets would also be faced with the issue of pricing, and therefore would you consider the situation of thin margins, reducing profits in order to control the rising cost, or transfer this to the consumer. So this is also a major thing. One of the most critical factors to also consider here is working capital. Inflation is known to quickly erode working capital. So going forward, there has to be better working capital management strategies by players in the consumer markets. So this is the status for consumer markets, and going forward, how to really look at dealing with this.
Just to add to that, I think you mentioned the issue about the food inflation.
Yes.
And then the transportation issue from the fuel increases is also another major. I just wanted to add that also. That it's affecting. And really crippling some of these parts. So definitely we are going to see some of these eroding of working capital, because most businesses, I mean, once fuel prices are going up, transportation is going up, it has also that effect on almost everything else in this part of the world.
That's true. Looking at agriculture, this is related to a point I made earlier. This is a perfect time for the wider agro value chain to explore filling in the gaps. We've always had situations where we've had players in the agricultural space raise concerns about reliance on imported products or the desire of the market to consume imported products. But we have a situation now where the markets are willing to consider alternatives. So this presents a perfect opportunity once again for the agro sector. An example is Nigeria. You know, Nigeria is going big on fertilizer now. It will be relatively easier for their markets, and in fact other markets that would rely on them to access this, and because of the issue in Europe, we know a lot of fertilizer comes from Ukraine, and so this decline in supply has created this perfect situation for players in the space. So for agriculture, the outlook is really a thing of whether the players in the value chain on the continent are ready to step it up. Obviously, it's not all dependent on the players. We also have the issue of finance. You know, investors should also consider if the Russia-Ukraine situation continues. I mean, if this is something that is going to go into the medium to long term, and have issues with shortages and supply shocks, then really this is a massive opportunity for investors to quickly, you know, partner domestic producers of certain products.
And just recently, I mean, India has also decided to keep its exports of wheat, because India exports a lot of wheat, I mean, added to Ukraine's supply. So just to add to what you're saying, once Russia and Ukraine situation continues, with other economies deciding that they would also want to create that food security in their country, then it's time for us to also look at how to create opportunities for our food security situation so that we can curtail some of these prices. So it's an opportunity for investors to look at these production lines.
Now, when it comes to the government, institution, the core issue with African countries, particularly in the sub-Saharan African area, is the issue of eroding fiscal space. Because of the unexpected issues. And so a lot of budgets are not really structured around some of these unexpected issues. We already know we have issues with high deficits in our budgets, and so any shock is a massive problem. And so that's the biggest issue, the downward adjustments to budgets in the region, particularly talking about countries that are reliant on the extractives, you know, that are experiencing downward price trends, like gold, for example. So this is giving a lot of challenges to governments in the region, and this would propel a lot of borrowing, because revenues are not going to come up as expected. So the alternative is to borrow, and we already know even before COVID-19 there was the high debt to GDP situation in Africa. So the issue here is how, you know, we adjust to some of these things, and how government is going to respond and manage the situation when it comes to revenue mobilization. Are we going to see some level of creativity in mobilizing revenue? Ghana, for example, has fought its way to e-levies, introducing the e-levy as a mechanism
which is projected to produce about 1.4% of the GDP.
You know, so I mean, how is this going to look like?
Yeah.
How successful this is going to be? It's a matter of time. However, there could be other ways to explore gains when it comes to revenue mobilization that African countries would have to explore. And particularly the debt markets are not as friendly when it comes to Eurobond markets. Ghana has had challenges in this market, and so the debt mechanism is not really great at the moment. Of course, there are some other institutions such as the World Bank that have programs that could some countries would rely on, IMF programs that some countries would rely on. But what these programs bring usually are policy restrictions. You know, so would it be, when you look at the intentions of certain governments and just oppose that with policy restrictions by some of these institutions, it doesn't always create this balance. So that's why the Eurobond market seems to be an interesting place, because it doesn't come with a lot of policy restrictions, or if any at all. So, but if that market is also difficult now, then the thing really is government upping its game when it comes to collecting revenues. And this is the crust of the whole thing now. And when that happens, you know, taxes as against policy rates going up, and food inflation. This is basically a very difficult situation to manage. You know, very challenging. And so private public sector implications are going to be really difficult in the at least in the next 2 years, when we look at the outlook of the sector, the government institutions. So this is what we are faced with. The question now is what we asked from the very beginning of this presentation. Are there going to be recoveries? Is there going to be recession? And what is the outlook for Africa, Sub-Saharan Africa, for this particular matter? Mathias, what's your take on recoveries?
On recoveries, I mean, clearly it's dependent on the resolution of the war. That's one. If we see the war coming to an end, then we are in a good situation of having some form of recovery. But then if we don't see that also, then we will have to find alternative ways of trying to meet up to some of these shocks that we are having in the parts of the economy. So we are also looking at a situation where the lockdowns in China, if some of these lockdowns are able to curtail those no dangerous variants coming in, then we can see some form of recovery. So if we have situation in Russia coming to an end in the short term, medium term,
that's a perfect scenario. That'll be the perfect scenario.
That'll be there. But then if we also have to look at the possibility of it continuing, then we would, like you said, we'll have to find the alternative ways of meeting up to the gaps that this situation have created in terms of the supply situations in Sub-Saharan Africa.
Right. Well, so when it comes to whether recession or not, the major thing here is advanced economies. I would say it's all about what happens in the advanced economies. The projections are going downward. If they go downward to the point of a recession, definitely there's going to be contagion. And so this is where we look at whether or not we should expect a recession. The answer to this is all about the decisions and the policies advanced economies take to deal with the situation. If we can have advanced economies come up with measures such as alternative trading relationships in the Eurozone area, if advanced economies can find solutions to inflation and some of these other issues that are disturbing the advanced blocks, then definitely we would say a no to inflation. Sorry, recession.
Yes.
However, if they should go to the extent where the advanced economies hit a recession, given that 41% of global GDP is from the advanced economies, and advanced economies provide a lot of aid and support to emerging markets.
Yes.
If they are hit with a recession, they are going to curtail, they are going to withdraw and go back on support and aid and some of these programs. Yes, the capital flows to emerging markets is going to decline.
Exactly.
And so this will then cause that ripple effect. We'll see emerging markets also on the decline, and then it's going to then become a global recession. You know, so that is the situation with the recession. And
it looks like European Union are trying as much as possible to shift from their dependence on Russia. There's been a recent projection to raise about $221 billion so that they can change their dependence from Russia. So they are projected between now to the next few years,
to change their trade focus.
Yes, trade focus.
Yes, so that's excellent. Measures of the sort that would, turn the direction of the growth.
Yes.
If it could go towards an upward trend, that would be the best for the entire world.
Yeah.
So the final situation is, what is it for? Our final question is, what is it for Sub-Saharan Africa? What's the prospect? What should we look at going forward? The biggest takeaway is opportunities within the agricultural value chain. Given food inflation, there's this huge opportunity for players within the space to take advantage of openings in the market. Investors can also come in equally, to take advantage of these opportunities in the markets. We are also expecting oil exporting economies to make a lot of gains. The gains made at this time with oil exports should be utilized to the best, and this is going to create a good environment for Africa. We have 60% of the world's arable land anyway, so this is although we are faced with a difficult situation on the global front, this is also creating a perfect opportunity for Africa to relook at agriculture and make the most out of it.
And added to agriculture is the manufacturing. Once that investment is coming in, then we are going to see good prospects.
Right. So thank you very much for listening to us. This brings us to the end to our presentation on the World Economic Outlook and giving you our perspectives to Africa and Ghana at large. Once again, I am Prosper Melomey. I'm a director at Bridgewater Advisors, and I have with me here Mathias, who is a research analyst. And if you have any question or you want to engage us regarding this particular presentation and discussion, feel free to reach out to us. You have on the screen our email addresses and numbers. You could also feel free to get in touch with us at www.bridgewatergh.com. Feel free. We are available to have this discussion and take this discussion further. If you also want to have access to the slides on your screen, you could have access to this on our website as well. And so thank you once again for tuning in. We hope to come your way another time with another interesting presentation and our views on global matters. Thank you very much.